Welcome to the Daily Trade. It is Tuesday, May 5th, 2026, and the markets are witnessing a generational shift in leadership as the S&P 500 and Nasdaq continue to push the boundaries of valuation. I'm your host, and today we are breaking down why the quantum advantage isn't just a buzzword anymore, and how a massive spending spree by big tech is reshaping the 2026 economic landscape. First up, the quantum breakthrough. Today, we are seeing the first real commercial ripple effects of what analysts are calling the quantum leap. After years of laboratory milestones, including Google's Willow chip, we've officially crossed the threshold where quantum processors are solving high-stakes optimization problems in finance and logistics that classical supercomputers simply can't touch. JP Morgan and Goldman Sachs are already reporting early gains from quantum-driven risk modeling, signaling that the quantum age is no longer a 10-year forecast. It's a Q2 2026 reality. Tech bulls are watching this closely, as it provides a fresh valuation floor for the hardware giants. Our second story focuses on the Agentic AI revolution. While 2024 was about the chatbot, 2026 is about the digital employee. Hyperscalers like Microsoft, Amazon, and Meta have updated their guidance, with cumulative capital expenditure now projected to exceed $700 billion this year alone. The shift from passive AI to autonomous multi-agent systems is driving 40% of enterprise software growth. These agents aren't just answering questions, they are managing supply chains and executing trades. For the S&P 500, this productivity surge is offsetting much of the labor market tightness we've seen throughout the spring. Third, we look at the macro geopolitical puzzle. Despite the volatility in the Middle East pushing Brent crude to the $110 range, the market is finding a temporary safety in diplomacy. All eyes are on next week's presidential summit in China. Investors are betting that a diplomatic breakthrough will cool trade tensions and provide a clearer path for the Federal Reserve. Speaking of the Fed, the benchmark rate remains steady at 3.5% to 3.75%, but with inflation hovering at 3.5%, the higher-for-longer narrative is being tested by new leadership at the central bank. Market participants are split on whether we'll see a rate cut before the year end, or if sticky energy prices will force another hike. Turning to index performance, the Nasdaq is leading the charge today, up 0.9% to a record 25,114, as tech bulls buy the dip. The S&P 500 is following suit, gaining 0.3% to sit near 7,230. Meanwhile, the Dow Jones Industrial Average is lagging slightly, slipping 0.3% to 49,499, as value sectors and airlines feel the pinch of those higher fuel costs. That's it for today's Market Pulse. Before we go, a quick reminder. This podcast is for informational purposes only and does not constitute financial advice. Always consult with a certified financial advisor before making investment decisions. We'll see you back here tomorrow for the midweek wrap-up.